Hi guys, this is Alelo Sylvester and today I'm going to show you how I consistently make over $1,000 trading the news. I welcome you to Digital Cash Point FX Special. Digital Cash Point is an online community for technical traders where I give up-to-date analysis on forex, cryptocurrencies and stocks. And today we'll be talking about fundamental trading. If you're new to my channel, welcome. If you're returning, welcome back. My channel is relatively new, so I would really love if you could hit the subscribe button and the bell notification icon to get updated when I post content like this. So without further ado, let's dive right into it.
Hey.
How do you identify key support and resistance points? All right. So every day there is what we call the high of the day, and there's what we call the low of the day. For my old students, they understand this better. The low of the day is that point the market will get to, right, bearishly, and never break that point. The point the market will get to bearishly and never break that point for that day. The market will buy for the rest of the day, right, and find somewhere to consolidate into the next day. All right, so that's for the low point. Now, for the high of the day is for the market to find a resistance point, the top point, where the market does not buy beyond, right? The market sells for the rest of the day, right? Finds a point and consolidates into the next day. All right. Now, what you want to see before a news is being released, please note we are looking at this from the 15 minutes time frame. Very important. I want to show you the structure, and then we'll go to the live chat to show you how to identify it. All right. So on the 15 minutes time frame, you want to see the market create either a high point, HOD, high of the day, right, or a low point known as LOD, which is the low of the day. So these are the two key points that we are looking out to identify. Now, if you are able to identify it before the news is being released, you can pounce on this trade with optimum accuracy. Look at this. Now, during the Asian session, we usually see that the market does not move that much. You see the market consolidate within the Asian session. All right. So from around, we're looking at the hours of 10 p.m., right? 10 p.m., see around 12 a.m., right? When the market opens up, right? We see the market, just consolidating or being dead. We call that a dead time. The market is just, moving at a certain range, not really going out of that range, right? The market is being reset at this point, and then during the Asian session, right, beginning of the true Asian session, then you see the market make some moves, right? The market can either move upward, right, or move downward within the Asian session, right? But then again, it still finds a way to come back into the range. So what we want to see basically is that we want to see the market widen up within the Asian session. Want to see the market widen up, right? I will do a different session on how to trade Asian sessions properly. How to trade it. There are key points you can trade the Asian session, but otherwise, just stay away from the Asian session because the market is usually very choppy within the Asian session, and that prolongs, stays that way until around 6 a.m. in the morning. All right, around 6 a.m. in the morning, 6 to 7 a.m. in the morning. Usually, when there is a news coming out for, please note this, when there's a news coming out for euros or GBP, if there is a news coming out for euros or GBP around 5 to 6 a.m., you see the market starts making an aggressive move. It could either be to the top or it could either be to the bottom, right? But the Asian range is kind of, widened. If there is a news coming out for euros or GBP, otherwise the market will consolidate into around 6, 7 a.m. in the morning, right? Before we start seeing any kind of aggressive move. If you have a news coming out for euros or GBP, right? Around 5 a.m. in the morning, you start seeing the market make some aggressive moves. All right. From 5 to 6, you should expect to see short moves. Otherwise, those moves will come around 7 to 8. All right. 5, 6, 7, 8 in the morning. Right. If you don't have the news coming out for euros or for GBP. All right. And I'll also explain why. Please, when you are learning these setups that I'll be showing you, I want you to focus on the USD news releases. All right. When you've mastered how to trade the dollar news releases, you can apply your knowledge of this to any other currency, and it works identical. All right. So for now, you only want focus your learning to around USD. All right. So we're going to see this. So let me just erase all of this and start over again so you can see clearly. All right. So we have our session. All right. We have our dead gap. The market is dead, right? From around 10 to around 12, 1 in the morning, market is dead, right? So from around that 1, you see the market starts making some, aggressive moves, but then again, it still stays within a range. And this is the beginning of the Asian session, all right? So that will consolidate or stay that way towards the beginning of, the London session, all right? So from around 5 a.m., right? If you have the news coming out for euros or GBP, you should start expecting seeing an aggressive move. Otherwise, you start seeing that move from around 7, 6, 7, 8, right? The market consolidates. So let's say this is around 8, all right? So by 8, you see the market make an aggressive move, right? When the London session comes live or during the Frankfurt session, you see the market makes an aggressive move. Now, this aggressive move can be in 3 swipes, all right, or can be in a single candle. But if you watch the position of that candle, it moves in 3 consecutive, motions. You watch it, right? It creates a point. That point it creates using this 3 consecutive move. If it's going upward, that point is called the high of the day. It usually confirms this high of the day by giving us a price action at this point, right? The price action can be tweezer tops at this point. It can be hammerheads, inverted hammerheads, right? No, you're expecting to see some form of price action at that point. It can either go down as well, all right? If it comes down, this point becomes the LOD. All right. There is one other thing you're going to add to your chart, and that is the moving average 13. You're going to add the moving average 13, exponential moving average, EMA. You're going to add it. Now, the reason I'm using EMA 13 for this, right, is that it helps me read the market oscillation properly, because, the EMAs, takes the average of, the specific candles. So this is for 13 candles. All right. There's a reason I'm using 13 candles. All right. Look at this. All right. So we have this. At this point, what you expect to see, you want to see a price action that creates the first leg. Right. So we'll call this leg 1. Call this leg 1. All right. Now, the next thing you want to see is that the market is going to fall down. All right, the market is going to fall down, and then the market is going to start rising all over again. Now, when the market starts rising all over again, it's coming back to this point. So this point simply becomes the point that you are checking out for. Please mark my word. This point simply becomes the point you are checking out for. This entire setup is trying to create what we call an M pattern or a W pattern. All right. The W pattern is what you see at the low of the day. The M pattern is what you see at the high of the day. When we go to the live chart, you're going to see this clearly. It's going to be like film trick. All right. So at this point here, we see some kind of price action. Let's say we have a railroad track at this point, right? The market comes back down, right? So what you want to see is you have the 13 EMA. The 13 EMA is going to flow through the market like this, right? So you want to see the market cut through the 13 EMA, cut back through it, right? And then if this setup lingers, right, towards the beginning, if this setup lingers towards the beginning of the New York session, you've got these bastards. Believe me, that trade is going to sell, and it's going to sell massively. Mark my word. Now look at this, right? I'm going to show you the nuances to this, the trades that you don't want to, you don't want to trade. Let me clean this. Let me do it again so that it will be clear. All right. Dead gap. Winds up. All right. Asian session comes to an end. We see an aggressive move. All right. This aggressive move is to trap all of the traders thinking the market is going to buy. All right. So there are a lot of traders that entered this point for a buy, entered here for a buy, entered here for a buy. All right. So they think the market is going to buy, and then they issue you a price action at this point. All right. It can be a railroad track. Right. You see a green candle and then a red candle back, similar size. All right. And then your EMA is going to come like this. You're going to see this. The EMA is going to come like this. And then the market is going to come back, cut through that EMA, right? It's going to give you another price action here, telling you the market is going to buy, right? And a lot of traders are going to enter this trade right here on the buy, all right? And do this in 3 swipes, all right? It can be 2 candles, it can be 1 candles, it can be 3 candles, or it can be, motions like this. Now, what this does, that this creates a false sense of continuity. Remember, I told you that a lot of traders enter this trade right here on the buy, right? Some will enter here on a buy, right? Some will even enter here at the worst point possible on a buy. The reason, because they did this, they broke this. Now, a lot of traders that trade range, support and resistance range, right? The retail trader, remember I told you what the retail trader sees is different from what the market really is about to do. All right. So you see the market creates a point, the market breaks through that point, right? And then breakout traders enter this here on a buy, right? They enter this point right here on a buy. The market comes all the way down, right? And takes them out on their stop loss, because their stop loss goes just below this, right? Takes them down on a stop loss and then moves again. And then they feel like, oh shit, my stop loss has been hit. The market is going back up. They enter the trade again right here on a buy, right? It goes all the way. They are happy. They are in profit. The market makes a little bit of pullback right here. And they say, no, the market is going to continue, right? Those traders that didn't enter right here, they see the market is making a pullback, right? The market is going to continue. They enter again. This market psychology, basically. They enter again right here on the buy, right? The market is going all the way up. This trader is happy. This trader is happy right now. I'm already in a little bit of profit. And then the market does this. The market goes all the way down very quick. It does that quickly. It does that fast. All right. The market comes all the way down right here. It doesn't take out this guy right here. So this guy still feels safe, but this guy is angry. This guy is feeling like, I can't lose money on this trade. I already made close to 20 pips already for this particular trade. Now I'm down to around 5 pips. No, I'm gonna wait for the market to go back up all the way right here, and then I'm gonna close my trade back around this point. I'm going to take my profit around this point if the market gets back there. No, this guy right now is scared. This guy now is praying in his mind, Lord, let this market come back to this region so that I can close this trade. I don't even care for profit anymore. I don't just want to lose money on this trade, right? All of these sentiment traders put into the business. This guy is angry that the market has come down all the way here. He has lost all of this, but he's not here in negative flow. All right, so he still feels the market is going to make a market is just making a pullback. The market is going to rally all the way back up. This guy right here is angry already. I mean, he's already 10 pips against him. He's praying for the market to come back all the way right here. He's not caring about profit anymore. He just want to close that trade. He's angry and all of that. And then the market begins to show him something that he really feels confident this time. The market starts coming up. Market come by, he's like, I got these niggas today. His projection is that the market is going to come all the way right here. He's going to take profit, 30 pips, 50 pips, 100 pips. He's already thinking of the Bentley he's going to buy, right? He's making all of those estimations in his head. This guy here is praying, Lord, I just want to close this trade. I am 15 pips negative. The market is against me. If this market just comes back here, even if it's just 0 pips, I will close this trade and I don't want to do I don't want to take this trade anymore, right? So all of these traders right here are stuck, right? The sentiment comes back all the way down, right? And then starts creating a new sentiment for new traders. Some traders right here enter this trade on a buy. Some enter here right here on the buy when this this deadline is broken, right? I'm just telling you what retail traders sees and how retail traders trades, and that's why all of them are always making losses. All right. So this is a deadline, right? So this is a little bit of resistance point. So when the market broke that resistance point right here, right? Some traders took this point again on the buy, right? Some traders entered this point here on the buy. Some traders have their pending orders right here, buy stops right here, right? The market goes all the way, right? Almost taking this guy out, right? So that this guy can close his trade, but then it stops around here, all right? Market stops around here, and then you will just see one aggressive candle, bullish candle all the way up. This guy is now happy. This guy is happy. He forgets to close the trade he wanted to close all the time he has been praying. All right. He's happy. He's now in 5 pips. 5 pips profit. He's rejoicing, right? This guy here that placed a pending order for a buy is triggered in. He's in around 1 pips or 2 pips in profit. And then the market makes a little bit pullback into the range right here. Back, this guy is back to around 0, right? He has not really made a lot of loss right here, right? So he's like, okay, so this market is just making a pullback. Don't worry, the market has broken through this point. It's going to, rally all the way back up. It's going to continue buying. So this guy said his take profit around 30 pips, places a stop loss, maybe around 15 pips around here, right? Around here, and then it's just waiting to see what the market is going to do. And then the market does this, starts consolidating, and then you feel like, yes, this market is going to buy, it's respecting this region, it can't fall back through, and then the news is being released exactly 2:30, right? And this happens. Now, what just happened? This market moves, the first move in the first 5 minutes, this market moves for 30 pips. Straight up. Mind you, we are in the 15 minutes time frame. All right. The market moves 30 pips in less than 1 minute. All of these guys right here, right? Some of their stop loss around here for this guy, right? For this guy, their stop loss has already been hit, right? So all of them right now are angry. This guy is hoping that, don't worry, this market is going to come back up. I don't want to lose money on this trade. And then the next candle that comes after this bullish candle that falls through does this. And in straight 1 hour, the market falls through on the sell. And then they tell you it's because of the news. The news came out, and then you are trying to find the correlation because of the news that made the market sold. But then again, you've lost money on this trade. Now, what is the trade setup that I just told you? Now, basically, all of these things I just explained to you can as well happen on a buy. I am basically showing you the structure of what the market does, right? So now I'm going to show you how to identify what to trade and how to trade it. All major news releases for the USD comes out around 2 o'clock, 2:30, 2:45, right? So we are paying attention to that. So let's do this. Now let me show you how to trade this. This is a session break. All right. Ooh, sorry about that. All right. We have from here to this point. This is Asian session. From here to this point, this is London session. And from here to this point is New York. All right. This is dead gap. This is dead time. Arranges towards when the new Asian session begins. The market is dead from this point. Nothing really happens in this region. All right. So the market does this, dead. Please pay attention. This is the key part. Asian session, rising up. All right. Creating this new range. And then during the London session, makes an aggressive move. Might be 3 swipes to the bottom. All right. Creates a point here. The first leg gives you this, goes all the way back. Your moving average is caught right here. And then it gives you another price action. Falls all the way back down. It's coming back to retest this point, which is now the low of the day. This point becomes the LOD. Right? The market comes all the way back down here, gives you another price action. Right? Now your entry is at this point towards the beginning of the New York session. And that's the time usually the news is being released, around 2:30. Please note, if you want to trade the news, you should be in that trade 15 minutes before that trade comes out. All right. So exactly 2:15, if the setup does not present itself, if the second leg does not present itself around that time, 2:15, please do not trade that. I'm going to show you this on a live chart. All right. So by 2:15, 15 minutes before the trade comes out, before the news comes out, 15 minutes before the news comes out, right? The market here will give you a price action at this point, right? Testing this low. Remember here, let's say we have a railroad track, red candle here, green candle coming up, right? Cost through the moving average, comes back down right here. At this point, they issue us a hammerhead. All right. This is the second leg. Testing this point, the market broke through it, right? But just before that 15 minutes, that 2:15 candle closes, all right? The market comes back all the way and closes here as a hammerhead, right? You want to enter this trade right here 15 minutes before that trade comes out. Please note, you should not be on any trade 30 minutes to 1 hour before a news is released. Note that. Write that down somewhere. You should not be on any trade 30 minutes to 1 hour before that news is being released. All right. So by 2 o'clock, right, or by 1:30, 1 o'clock, if you are on any trade, close it. You are done with that trade for that day. Am I communicating? All right. You want the market to present itself to you before you take it. Please, if at this time 2:15, the market goes all the way and breaks that range with a red candle, right? Right here, a red candle breaks that range, and the next candle does not come back and do this. Does not come back with a green candle into the range, or at least give you some form of green candle that just brings the market back into the range. So green candle, right? Your entry is at this point. If you don't see that in the last 15 minutes before the news is being released, pass out on that trade. Do not take that trade. All right? But if that trade presents itself whereby this point holds, please mark my word, this point holds before the news comes out, enter this trade right here. Your stop loss goes 15 pips away from your point of entry. 15 pips. You do not set a take profit. You monitor the market for a take profit, because the market can move in the first 5 minutes, can move 50 pips, but can as well move 30 pips in the first 5 minutes as that news is being released. In this case, what do you want to take this trade as? A buy. And exactly 2:15, 15 minutes before the news is being released, there's a confirmation from price action. You see it right here. You take this trade right here on a buy. The moment that news drops, in the first 5 minutes, you should be up big in profit. Why are you using a 15 pip stop loss? The reason you are using a 15 pip stop loss is that the moment that news is released, the spread opens up. The margin to which the spread opens up is usually 10 pips. Sometimes the spread can just be 5 pips, just open up 5 pips. Sometimes it won't open up that much, right? But sometimes it will just open up drastically, 10 pips against you, all right? So you want to be 15 pips, away from your point of entry or away from the low of the day, all right? So 15 pips away from this point, 15 pips, calculate it, your stop loss goes there. Sorry. Entry right here, 15 pips away. So we are looking at if your entry is quite tight, close this point, you can just go ahead and use 15 pips away, right? But then if your entry is not that tight, you should be looking at around 20 pips, right, altogether. Looking at around 20 pips altogether, right? The reason is that the spread will open up 10 pips. Your stop loss should not be hit at this point, right? The moment you see this and the news comes out exactly 2:30, the news comes out, the spread opens up. The moment the spread collapses back, you will see it. The moment the spread collapses back, why is the spread opening up? Is to take out all of those traders that got the position right. All of the traders that entered this trade on a buy, right? The reason it will open up is so that you can close them. You can hit all their stop loss and close the trade just before it moves. The second reason the spread opens up is for those traders that use pending orders. Remember, please, this is very important. Straddle strategy for trading the news will tell you that 5 minutes before the news is released, place your pending orders. 10 pips buy, 10 pips sell away, right? So this will be a sell stop. This will be a buy stop. 10 pips away from the current market price. So when they open the spread, they will trigger this guy that is here that placed a sell order, a sell stop. They will trigger him into that trade, and then they will move up. In some cases, you will see both the ask and the bid price will be fluctuating 10 pips. they will be fluctuating 10 pips. You see the ask price will go all the way back, all the way up, right, Liz? The bid price will do the same, and the market will just fluctuate. What they are doing is that they are accumulating contracts. All of the pending orders for buy and all of the pending orders for sell, right? They will do that. They will first of all do the buy, right? So that when they take it down, the stop loss will be hit. That is why straddle strategy is not the best way to trade the news. It does not work. All right. So when they do that, the next thing is that in the next 5 minutes, you will see a massive candle. All right. If this candle is so massive that it occupies 30 pips, if it's so massive that it occupies 30 pips in its first movement, right? Within the first 5 minutes, sorry. Remember, we're in the 15 minutes time frame, but you are checking your clock, right? So if around 2:35, when that news is released, right? Around 2:35, when that news is released, you're already up to around 40 pips in profit. Close that trade. Take your 40 pips and leave the market. But if the market does not make that aggressive move at once that gives you 40 to 50 pips in one move, right? It does this. It can probably just move 10 pips around here, right? Stay on that trade. The next candle that is going to come up will be the massive candle. We call that after effect. So the next candle can probably give you 50 pips plus this your 10 pips. Altogether, you are leaving that trade with like 60 pips with profit. Did you get what I just said? All right. So that is why we don't set a fixed take profit. But when you see the market moves massively in the first 5 minutes, you're already 70 pips high in profit. Close that trade. Because the next candle that will open up for the next 15 minutes will fall back all the way and will take out all of that profit. I promise you. All right. So you want to be sensitive. Usually, I have a fixed take profit for this trade. My take profit is around 40 pips. For high ranging pairs, 40 pips. Pairs that have high ADR, average daily range. So if the average daily range is around 80 pips, I can take 40 pips. If the average daily range is around 60 pips, I take 30 pips and I'm done. And every single time my take profit is hit. All right, so you don't set a take profit, you use a mental take profit, you calculate your take profit along the way. You're looking out for around 30 to 40 pips. All right. If the candle moves massively within the first 5 minutes of that 15 minutes time frame, close the trade in whatever profit you've accumulated in that 5 minutes and just let the market ride from there. Because in most cases, in the first 5 minutes, the market will go all the way to 70 pips, and in the next 5 minutes, drop back to around 60, right? And then with the end of the 15 minutes time frame, you will see a candle that looks like this. You see a long spike candle, and this move will just probably give you just 15 pips at most. When at a point in time, it got to this point, it got to around 60 pips. All right. So all of these are the nuances that I'm trying to explain. So this is the basic structure of how you should trade the news. All right. So I'm going to show you on the live chart. I'm also going to show you other components of the system that help you confirm your points. All right.
Thanks guys for watching. Also, only a little percentage of my viewers are actually subscribed, so I would love if you could hit the subscribe button. It's totally free and you can always change your mind.